We're still running our core average balanced portfolios, which 60% or so allocated to equities, and still a big weighting towards the United States, although towards the end of last year we were taking quite a lot off the table as far as
Didn't
tech.
You go neutral the US though?
Yeah, so as I say, still got, but what we've done is we've altered the components within our US allocation. So having been quite heavily weighted towards tech, we wound that back towards the beginning of this year. Good timing in terms of what has subsequently happened, but overall still looking at a big weighting in the US, and that's probably appropriate given where the earnings numbers are still expected to be.
Okay, Sherry, come in on this.
Yeah, and Stephen, are you getting into or thinking about getting into Europe or LATAM assets as at least a tactical move at this point? Because those have been really the popular calls that I've been hearing.
Yeah, that's true, and certainly referencing Europe, obviously the change in government in Germany is having a significant positive effect in terms of the way that the German government is viewing defence spending and government spending in totality. So that has had a positive effect. Obviously, also everyone's looking to take a little bit more of a balanced view on currency risk as well, having a little bit less exposed to the US dollar and more exposed to things like the euro makes good logical sense long term.
What about Asia, though? Because I feel like Asia could be really exposed to all these tariffs, but in cases like South Korea and Japan, they seem to be getting priorities when it comes to tariff negotiations. And is that a good thing? Does that get these markets into the front line when you consider the next destination for your money?
Yes, in fact, actually, earlier on this year, we actually increased our allocation to China, and we continued to hold our core weighting in India. China specifically because this was pre-tariff. We anticipated that the Chinese government was probably going to get a bit more activist in terms of fiscal spending. It looks as though that is actually happening now, whether or not it's coming through in various market support measures or in various support measures for local companies which may be affected by tariffs is neither here nor there. It's still positive from the perspective of a pivot by the Chinese government towards more fiscal support.
Yeah, so is it the usual lower valuation kind of story for China and stimulus on the up their sleeves kind of story for China? And exactly what kind of exposure are you getting in China?
So in terms of our overall allocation, we've got a market weighting towards China now, and our weighting towards India is a little bit overweight. We think that India is also going to be actually probably a net beneficiary of some of the tariff talks that are going on at the moment. But one word of caution is that, as we heard from Scott Bessent, they're talking about memorandums of understanding. A memorandum of understanding is just an agreement to continue talking. So it's not actually an agreement on specific policy, timeframe, implementation and amounts. That will take time. So we're just at the very start of what is probably going to be quite a long road. And unfortunately, I think more volatility is the name of the game.